Got a story here with consumer packaged goods and environmental angle. JBS, the Brazilian meat giant, Danone, the dairy empire, and other food companies may see billions of dollars of revenue jeopardized when the EU's deforestation rule takes effect. It's an example of companies increasingly being held accountable for supplier behavior. And we are seeing a move towards stricter regulations on businesses involved or implicated in deforestation. We're joined now by Bloomberg's Melanie Rua. Thanks very much for coming on the show, Melanie.
Hi, Andrew. Glad to be here.
Remind us what the EU is doing. What's their plan here?
Yeah, absolutely. So the European Union's deforestation rule prohibits the import and trade within the European bloc of products derived from land that was either deforested or degraded after December 31st, 2020. So the EUDR really applies to 7 key commodities, but also their derived products. So in this case, packaged food companies are particularly exposed. We know over half of the 288 packaged food companies that we analyze disclose involvement in these high-risk commodities, and then 43% acknowledge that their suppliers are linked to forest risk commodities. So the rule will go into effect this December. Those small and micro enterprises have a delayed date of June 30th, 2025. So yeah, companies will definitely need to review supply chain relationships and sourcing practices in order to comply with the regulations.
I'm just thinking about two giant European food companies, Nestle and Unilever. Your reporting indicates that they stopped, or your analysis indicates they said they had cut off suppliers involved in deforestation back in 2018, but they could still face problems here?
Yeah, for sure. I mean, for all packaged food companies, this rule really presents a significant challenge in terms of transparency, traceability, costs, and even operational changes required to comply with the new regulation. I mean, the 93 food companies globally we analyze were the ones that have annual revenue generated that's derived from business activity in these forest risk commodities. That's the about $418 billion you're seeing. And this, of course, includes also Canadian packaged food companies, but like you mentioned, Nestle, JBS. And so, yeah, just 15% of these companies have committed to achieve zero deforestation across their own operations and or supply chains. And so failure to comply could impact the company's market positioning, potential fines or legal consequences, supply chain disruptions if suppliers are found to be non-compliant, which is what those two companies had to do. And yeah, we found that companies are looking to enhance transparency and accountability across their supply chain, whether it's by conducting risk assessments, supplier mapping, or implementing some neat traceability systems.
And you note as well that JBS, the big Brazilian meat producer, it planned to do an IPO last year, but pulled back after environmental objections were raised?
Yep, that's exactly right. And, JBS on our report showed that they did have the greatest at-risk commodity revenue amount with our peer set, at least, nearly $75 billion. It does plan to deliver zero illegal deforestation in all Brazilian biomes by 2025 for direct and tier 1 indirect cattle suppliers, and net zero by 2040. But in our note, we did use geospatial analysis to look at its assets in Brazil and the biodiversity and integrity of the land, finding, 3 of their assets are located in areas with pristine ecosystems. And then we also looked at tree loss across some of their assets in Australia.
That's interesting. And you were looking at satellite data, you said?
Yes, exactly that. So our note uses different ways of incorporating geospatial analysis using the satellite data on the terminal. So we reviewed assets, located in areas with high biodiversity integrity, and then also assets located near areas with recent tree loss. So that would mean after 2021.
Thank you very much, Melanie. Melanie Rua of Bloomberg joining us there.